here. Okay, so everyone, welcome. It's good to be with you here. Thanks for taking a few minutes of your time. Our goal here is to help you better understand what in the world's going on with all of this SBA stuff you're hearing about. You're reading about it. You're seeing emails from us, or you're talking to team members of ours. So our goal here today is to kind of go through what is happening. We are going to record this, so you can chat in questions. You can, if you have questions you want to voice or whatever, you're welcome to do that. If you want to stay a little more anonymous, that's great too. But Zach, our great team member who's got this all together, will, when we get to questions, he may interrupt me, or we will get to points where we can talk about questions that you have. There's a lot to cover, so I know I'm not going to get it all covered. But again, so my name's Brad Allen, one of the co-founders of Davies Allen. Most of you know me, or some of you have been referred to by friends here to the call. We're grateful for you being here. I'm going to start high level with what is taking place. Little did we know as CPAs in the profession who read tax code for a living that we were going to become SBA informants. I did not know any of this information a week ago. And so many of us have been up through the wee hours of the days studying this tax code, talking to people in DC, talking to people locally, and it's a rapidly changing environment. So we're going to give you the best information we have now, and it would be remiss if we didn't say there could be some adjustments to this because there's new things coming out all the time. But in general, what has happened from a congressional standpoint with the SBA is on March 16th, the Congress said, hey, coronavirus is going to have an impact. And so what they did at that point in time is they loosened rules and regulations with regard to a certain type of an SBA loan called an Sba Disaster Loan, otherwise known as an EIDL loan, which is, if you can see on my screen, there's an economic injury disaster loan that comes with a $10,000 loan advance. Now, this happened on March 16th. They loosened the restrictions. COVID-19 was declared to be a disaster. To qualify for this loan program's been in existence forever. Well, not forever, but for a long time. For people if their buildings get destroyed by tornadoes or earthquakes or any other kind of federal disaster area. Just this weekend, they streamlined the loan application process for this. So if you hear disaster loan, I want you to think of this, what we call an EIDL loan, EIDL. That's what's being referred to if we're talking about a disaster loan. Okay. What are the parameters for this loan? There's an application here you can click on. It's pretty straightforward, takes about 15 minutes. If you meet these parameters, then you can apply for this loan. They say within 3 days, you'll get a $10,000 advance, whether you end up getting the loan or not. This loan is not the forgivable Paycheck protection loan that you've probably heard also so much about. They are different. Important to understand they are different. So the EIDL loan is available. The Paycheck protection loan or plan, PPP program, I guess, is also available. Common question from people is like, well, I really kind of want the forgivable loan, but can I do both? The answer is you can, but there's some exceptions to this. Okay, you can't get each of these loans for the very same thing. Okay, so let me give you an example, and I'm going to go to the U.S. Chamber of Commerce put out this little thing, and we'll send you all these. But this Paycheck protection loan is more for, as you see here on my screen, payroll costs. Okay. It's going to be granted based off of payroll costs. Your average monthly payroll amount, 2.5 times whatever that is, and has been for the last year in the covered period, so into 2019. That's what they're going to be looking at. If you have employees you pay more than $100,000, they cap the average monthly amount for those employees that have prorated $100,000, which is $8,333. Okay, so that loan and the EIDL loan are not the same. Can you get both? Yes, if you meet the qualifications. You can't go apply for an EIDL loan, this disaster loan, because I can't pay my employees, I can't pay my rent, I can't pay, utilities. You can't apply for the EIDL loan if you intend to apply for this, what's called a 7A loan or a PPP loan, for the same reason. I was trying to think of some examples of what might qualify. Well, yeah, I'm going to apply for this payroll loan, but what might qualify? We don't know, because no one has underwritten these loans yet. Okay, we don't know. But what might be an example? Maybe you're sitting on a lot of accounts receivable, and now because of this COVID pandemic, you're probably not going to collect those. They're going bad. Okay, that's a disaster created by COVID that's not related to payroll. It's not related to your rent. It's not related to your utilities. Okay, that could be a reason, I think, where you have a disaster. Instead of the building getting, torn apart, your accounts receivable got torn up. Okay, so I really want to distinguish between these two loans to start off with, and hopefully that's clear, and I'll answer questions on them. But I want to start with this disaster loan because we get a lot of questions about, I applied for the disaster loan. Does that mean I can't get this paycheck protection loan that I'm hearing about? And we're telling them no, but you got to understand these important principles that we're talking about. They can't be for the same thing. And the code, as I've read it, it's page 12. If you want to go look it up yourself, has a duplication clause that's very specific, saying you can't get the same loan for the same reasons. However, we have come across some notes from Senator Rubio, who was tasked with this by Majority Leader McConnell. It says if you did get an EIDL loan, you could refinance it to a 7A loan. I don't know how they're going to do that. We haven't seen anything on that. But that's the first step here, is to understand the differences between these two loans. EIDL loans are 7B2 in the SBA code. These paycheck loans are 7A. Different application process, different everything. Okay. These EIDL loans are really easy to apply for. You apply directly to the SBA. You don't use your local bank that does SBA loans if you got a building. These go straight to the SBA. And then what happens is, and they say 2 to 3 weeks with this volume. We don't know how long they're going to respond. They say 2 to 3 weeks. They're going to reach out to you, and you're going to negotiate and discuss what your loss is, right? And if that happens, don't be saying, well, I can't pay my employees, can't pay my rent, I can't pay my utilities, I can't pay these things that we really want for this 7A loan. Have some other argument, like my accounts receivable are bad, or these other issues you might be able to think of. I know some dentists got their offices closed for 3 weeks mandatorily, or maybe you have a stay in place order. So you're like, I don't have any revenue, let alone pay my employees. I don't even have any revenue, right, to pay other costs. That could be part of the argument too, right? Is revenue is substantially impaired, has nothing to do with being able to make payroll. It would be nice to have revenue to pay payroll, but I have none, which means I can't pay payroll on a whole bunch of other things not even covered by the 7A loan. Okay, so to be specific, these are with the SBA. There's going to be a waiting time. You can get $10,000 in an advance. When you go through this application process, you put your bank account information in and wait. They say 3 days, the 10K may show up or will show up. I haven't heard from anyone where the 10K showed up, but this streamlined process came out this weekend. We'll find out more how it's working for people. So another question that's common that people ask is, well, what if I get the 10K and then I decide I don't want this disaster loan. I got the 10K, but I really want this 7A Paycheck protection loan. The code specifically states that you can do that, and that the 10K that you receive from this disaster loan will be applied against any forgiveness of the paycheck loan. Repeat, this 10K from a totally separate loan, they're saying will be used first in any amount that is forgiven on a 7A loan, the paycheck loan. Okay. So to go back to this, this is a pretty good summary by the U.S. Chamber of Commerce as to what counts. And we're going to go through some things of what count. There's been some rapidly changing environments today. But just a high level look, payroll costs. There's certain payroll costs that are excluded if they're over 100 grand. And then you get to the point where, okay, it's average monthly payroll times 2.5, because they intend this to last for a couple months. That's the 2. And then the 0.5 is to cover these interest on rent payments, if it's a building that's owned by you, rent payments, utilities, some of these other costs that are not true payroll costs. That's how that 2.5 is coming about. But this loan will be forgiven at some point in time. We don't know when. We know that the period ends on June 30. So at the end of June 30, their motivation from a congressional standpoint is keep people employed. We want you to keep people employed. We want you to keep them on the payroll. We're going to loan you money to do that for a couple months. And if you do, and you meet the parameters, you don't go off and use it, make other loan payments or pay other bills or accounts payable or buy inventory or some other thing, you prove you can use it for those reasons, then we will calculate forgiveness. And what makes this loan forgivable is A, you keep the same number of full-time equivalents, FTEs, meaning they know you may have someone who resigns employment or takes new employment or whatever, and you rehire. You keep same equivalent FTEs and similar compensation amounts. You can't be docking everyone's pay to keep them on and try to, cash flow the excess. They want similar level of pay and similar FTEs, and you're going to be submitting that to your bank, your local bank. And that's a good point. These 7A loans are going to be approved by the SBA, but originated through local SBA lenders. Can you imagine them sitting in Congress saying, all right, we've just authorized $350 billion. We don't want to do that. The EIDL loans is $10 billion with a $2 million cap on the loan, and these payroll loans could be up to $10 million for 10 years and $350 billion. So they don't want to be, they wanted to use their local SBA networks that they already had in place. So all of these local banks, if you will, are scrambling now, thinking they were going to maybe furlough people. And like, geez, we got to figure out how we're going to do this. How do we want to participate in it? We've been talking to a lot of them. Who's going to be at the front of this? Who's only going to work with their clients? Who's going to work with anyone? Because the government's paying them good money to originate these loans. 5% on the first $350,000 to originate these loans. And the SBA is backing them on 100%. It's a pretty sweet deal for these local banks. So these ones have loan forgiveness, okay? That's what everyone seems to be attracted to, although there's a lot of questions about doing both. So now, obviously you're interested because you're on this call. You've heard about it, you're assessing your business. What qualifies you to receive one of these loans? Let's go through that. The code talks about some specific things. But this right here that I'm showing you on my screen just showed up today. They just released. This is hot off the press, like in the last hour and a half or so. This is the application we've been waiting for. We now have the application for these 7A paycheck protection loans. We will distribute that to everyone on this call so that you can look at it, see it, probably can find it online. But we're hearing you can't apply till April 3rd. But what's going to be needed to apply? Okay. So I just kind of want to cover what this application shows, because this is what's going to be going with your loan application. Basic information about your business, right at the top, not a surprise. Who are you? And how do we contact you? Next one is what's your average monthly payroll? So that's going to have to be figured out. You're going to have payroll documentation. And the way that these loans read is you're going to need to be able to provide that from January 1 of 2019 to 12/31 of 2019. Payroll reports, copies of 941s, things that help you gather that. And even look by employee, because there's got to be limitations applied if someone's making more than $100,000 prorated. We've kind of built up some spreadsheets here in the firm that we can send or assist with in trying to calculate this. So average monthly payroll, that's a critical number. The bank's going to have to get to that. The quicker and easier you can provide documentation to that number and prove it, the faster I believe your loan application will go. All of us who've dealt with the federal government know that speed is important, but accuracy is even more important, because you don't get to get up at the front of the line with your application and then say, oh, well, oops, sorry, I forgot this. Now you go to the end of the line and you start over is how it feels. I don't think it'll be any different with the demand for these loans. You want to have stuff buttoned down up front. So your average monthly payroll divided by times by 2.5% equals the loan amount. They obviously want to know the number of jobs, meaning the number of employees. That's kind of your FTE count. You select the purpose for the loan: payroll, rent, mortgage, interest, utilities, just like I mentioned. This is why that disaster loan can't be for these things. They do not want you double dipping. The code is very specific about no double dipping. If you got a disaster other than these things, then make your case. We'll talk to you about that separately. Okay. Down through this application, ownership, anyone that's more than 20%, include those. Then they go through some basic questions about, have you been in trouble with the feds, bankruptcy? You ever, been delinquent on an SBA loan? All, typical things that you would see. Number 4, has the business received an SBA economic injury disaster loan between January 31st, 2020 and April 3rd, 2020? If yes, provide details on a separate sheet as identified in Addendum B. If you're getting a disaster loan, this is where you're going to have to make your case that that loan was not for what this Paycheck protection loan was for. It has nothing to do with it. Okay? Otherwise, that's kind of are you trying to double dip? If you've applied, we need more info. Okay? So again, you can still do both, but be careful on how you make your case. Rest of the questions are pretty similar: citizenship, those types of things. Let's get down to some of these representations that you have to say, because I have a lot of people asking, like, do I qualify? Is this something I should even get? Here is some of the certifications that each owner owning more than 20% are certifying of by initialing. There's current economic uncertainty that makes this loan necessary to support the ongoing operations of the applicant. Well, duh, right? I mean, I think that should be a pretty easy answer for almost every business. The funds will be used to retain workers and maintain payroll or make mortgage payments. Again, you're certifying to the use. Documentation, verifying the number of full-time equivalent employees on payroll, as well as the dollar amounts of payroll costs, covered mortgage interest payments, covered rent payments, covered utilities for the 8-week period following this loan will be provided to the lender. So they're basically saying you're going to provide documentation at the end of all this. You're not going to provide some of this other documentation up front other than the payroll to get to the average monthly payroll. But at the end, the only way this is forgiven is you're coming back with documentation. They've assigned a special inspector general to, they're going to be auditing these banks. They're going to be auditing these applications coming through. The next thing here is loan forgiveness will be provided for the sum of documented payroll costs. You're basically certifying, again, what you're going to use this for. Due to a likely high subscription that's anticipated, not more than 25% of the forgiven amount may be for non-payroll costs. Again, they're emphasizing here, that's new, they're emphasizing This really is to keep people working. This is not meant to cover other types of things. We'll give you 25% of it for these rent and utilities, which actually I think strengthens the disaster loan argument for other stuff that's not even covered by this loan, in my opinion. During the period beginning February 15th, ending on December 31st, you're not going to receive another 7A loan. You're providing the true and accurate information, certifying those types of things. The lender will calculate the loan amount using tax documents you've submitted. I think 941s, quarterly payroll filings, W-2s, those types of things from last year. So those are the high level of what's going to be needed. But if you look at like, do I qualify? It's like, well, have you had a supply chain disruption? Have you had a business closure? Are you having reduction in revenue type things from areas going on? That's how the code reads. Have you been impacted in areas that cause you to struggle making payments here, or have doubt about being able to make those payments for payroll to keep your employees that you already have? This is not a loan to grow your business. This is a loan to maintain the business. In here, you get some more instructions that you can all read, but it talks about average monthly payroll, and it goes into some details. Basically, we've covered. But for new businesses, if you weren't in business last year, then you got to go with your last 2 months that you have been in business. The best information that you have. So that all being said, if we were to be on an individual phone call, these are a lot of the things that I would be covering. We have 2 different types of loans. They have to be for 2 different types of things that can be related to this pandemic, but you don't want to be making the argument for a disaster loan that you're trying to cover payroll. You're trying to make rent. You've got to have some other reason. There is the ability to refinance or convert over. The 10K is an advance, and it's the first 10K that can be forgivable when you go back and submit, hey, here's where I spent the money. Here's what's going on. Here's all my records that I can prove to you the money I received and where the money went. So at a high level, from the notes that I have, we talked about, I believe April 3rd is going to be the first day to apply. So you got some time to pull this information together, time to look at this application, time to get things ready. But I believe most business owners are going to qualify for this thing. I believe the government believes most business owners are going to qualify for this thing. I don't know anyone who really hasn't been negatively affected, save a few industries which are growing like crazy, and those companies are, rather large. But there's, I'm sure, a few that maybe could say this has made my business double. But for the other 99%, there are legitimate doubts about what the future looks like, what's going on. So that's what I have to say up front on these 2 loans. Hopefully that's helpful understanding the different types of SBA loans and what this all means, how we apply, what qualifies. Zach, do we have any questions from this group that's on this call that I could answer that you could read off?
I haven't had anything come through the chat yet.
Okay. Does anyone have any questions that they want to type in and chat in? Or I guess if you want to be on audio, you're welcome to ask those. But this is really incredibly thrilling stuff. I know. You guys are just like, Brad, what have you been doing for the last week? That's why, to the earlier point, I don't have any good jokes to tell because the joke's probably on me, right? But it's been a learning process for us as we've literally stayed up at all hours of the night, studying, reading the code, calling and asking questions, and we continue to get further clarification like this application today, which is a huge blessing that we actually have this now. We've been speculating what's been on this application for literally 5 days. So,
Brad, some questions have come in. The first one, just to be clear, from the very start of the process, do we work with our bank or do we work with the SBA?
So it depends on which loan. So if it's a disaster loan, you're going to be working directly with the SBA. Okay. Disaster loan, I'll say, is the idle loans. The 7A loan is going to be submitted to your bank, and we're going to be putting a list out. We've kind of been testing who's like I said, on top of this and what's going on, but you got a relationship, please leverage that. That loan for the payroll is going to go through your local bank. They're going to review it, make sure they feel comfortable with it, send it to the SBA, is my understanding. SBA is going to approve it, basically give it a loan number. At that point in time, once it has a loan number or something equivalent, then the SBA is going to fund. Okay, or the loan's going to fund. That's my present understanding. Again, I've never originated a loan in my life to qualify this. So, but I'm just going off of what these applications say. We've talked to a lot of bankers about how they see these things going. So,
Okay, Brad, another question for you.
yeah.
I work consistently with independent contractors. Can I get any relief to send money their way, or will they need to apply independent of me?
They're independent. So there's a whole separate stream for independent contractors. I was reading some things that they're going to be able to apply on by April 10th, but they're separate. This is related to payroll only for your business or businesses if you have more than one. A common theme is that I hear a lot is, well, what about dividend payments? Dividend payments don't count. They've not been subject to Social Security and Medicare tax. They're not deemed employment related. So dividends are profit distributions. They're scoped out of this Paycheck Protection Program loan. If you want to make a case with the disaster loan, like, hey, forget my payroll. This has nothing to do with my payroll. And I've been making X amount, and irregardless of payroll, I don't care about that. Maybe I don't have payroll, but this has damaged my business in these ways. Then you want to go the disaster loan route versus the payroll route if it's all dividends. That's a common question. I've gotten a lot of questions over the last 4 or 5 days, so I apologize that I probably won't remember them all. So thanks for asking. Other questions, Zach?
Yes. Okay. How does the SBA guidelines work, or these loans work, if I have multiple affiliates or multiple businesses that file composite together or flow together ultimately?
So you'll see on this this Paycheck Protection Program right here at question 3, is the business or any owner of any other business have a common management with any other business? If yes, attach a listing of all affiliates, describe the relationship as an addendum A. You're going to have to give them for this 7A loan additional information about what's going on. And also, it depends on, are the affiliates applying for a loan, or do you just have them out there, right? If they're applying for the loan, you better be pulling the payroll up for them. And I'm not exactly sure if they're going to apply separately, but if they are standalone and have their own payroll, I could see it going either way with them. We may have to talk to the local bankers on the 7A stuff. On the Sba Disaster Loan, I know it's entity by entity where you have the disaster, and they all could be affected by the disaster, where you're like, hey, I have 6 entities and here they are. But even on the application for the disaster loan, you basically give them revenue and cost of goods. That's it. You don't give them any financials on the disaster loan. You just basically tell them, I've got a disaster. Here's the problem. Here's my revenue. Here's my cost of goods. I want a 10K advance, and they're going to reach out to you and ask all the other additional questions. I don't exactly know what they may ask, but they're certainly going to be a little more work in underwriting on those. So I don't know if I answered that question, but let's go to the next one. More questions, Zach?
I'm hearing, will clients that Wendy Dalton's asking a question. Will clients that say a milk farm qualify? Mink farm?
Well, again, depends on how much payroll the mink farm has. Being a farmer myself, ex-farmer, I guess. Well, I guess I'm a current farmer. But so it depends on the loan. If you don't have very much payroll, some farms don't. They don't have a lot of payroll. The disaster loan might be the route they need to go. If they've got economic losses, because I know particularly the mink industry has been hit hard globally because of this. So that's where you have to evaluate where's my loss and what's my employees that I have, how much payroll do I have. You could qualify for both again, right? If the losses are different. So depends on payroll, I would say, but any business qualifies that's been affected by COVID-19. It's just the amount is going to be based off of, for one of them, payroll, and for the other, what is the loss that you and the SBA can negotiate that's unrelated, not going to be used for these things that have a duplicitous relationship with payroll and the Paycheck Protection Program.
Another question's come in. So with the Paycheck Protection Program, asking, can we request a loan for payroll, rent, and utilities? Brad, maybe just covering again. My understanding is you're applying for all those things. The amount you get is based off payroll, and the forgiveness is based off payroll, not based off the other expenses that you use it for. Is that correct, or can you provide some guidance there?
So the amount of the loan you will qualify is going to be strictly based off payroll, 2.5 times payroll. Okay, that's the loan you're going to get. What you can use it for, okay, once you get that, let's say that your average monthly payroll times 2.5 ended up being, we'll just make up a number, $100,000. You get a $100,000 loan. Okay, what are you going to use that $100,000 for? They're basically saying you need to use it for keeping the same number of FTEs, keeping the same level of wages, and you can use some of it for rent and interest and utilities. But as you read this application, first time I've seen it in here, due to the likely high subscription, it is anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. Basically, the SBA is coming in and saying, yeah, there's going to be such a high demand here. Our primary goal is keeping people employed, not paying your rent. So we're going to give preference to payroll and proving that. So how the forgiveness works is you prove the payroll that you spent it on compared to what you applied for. So there's this reconciliation. This is what my average monthly payroll was when I applied. This is the amount that I paid. I paid the same average monthly payroll for that period of time, plus some of these other things. That's going to be the formula that you go through for forgiveness. If you don't get forgiven all of it, let's say it doesn't go exactly right, then what do you have? You have a 4% interest loan over 10 years that you'll end up having to personally guarantee after the end of 2020. The SBA is going to back at 85% for these lenders, but I know these lenders aren't really interested in giving loans to where they're taking any risk and just talking to them. So they're going to be looking at these things saying, how confident, in my opinion, I'm only speaking for myself. Again, I'm not a banker. I've never originated a loan. These bankers are going to be looking at it and saying, how confident I am this person's going to use this for the right thing. Am I going to be stuck with a 10-year loan where I've got some risk as a bank?
Brad, in addition to this SBA stuff that we've seen, we've got some questions coming in about the Family First Leave Act, and maybe the qualifications of that, if you're able to talk to that in this call. And additionally, and probably in tandem with this, does taking the loan and also qualifying for the payroll tax exclusions found under the Family First Leave Act, does that create any sort of problems or any sort of conflict or double dipping issues that we need to be aware of?
Brad, you're muted. Thank you. Sorry. Basically what happened is, so the Family and Sick Leave Act is totally separate webinar, but here's what happened in that one. The government came in and said, we're mandating that you pay sick leave for people who have COVID-19 or are caring for someone with COVID-19. And you have to do that for 2 weeks at 100% of their pay, up to $511 a week. Now, maybe you don't have COVID-19 and you're not caring for someone with COVID-19, but you're having to stay home because every school in the nation's out, basically. You got to care for children under the age of 18. That mandates that you pay 2/3 of their salary, up to 2/3 of that, up, and and up to $200 a week. And so the sick leave portion for the that would go for 2 weeks, and then the family leave would kick in for another 10 weeks, 12 weeks. The question is if paying wages that I'm getting tax credits for family leave, will those qualify for loan forgiveness? That's a great question. I don't think I'm confident in the answer, because I know that you would be double dipping if you're getting reimbursed for family leave by the government in the form of payroll tax credits. So my general feel is the answer would be no, because they're not wanting you to double dip these things where all of a sudden the government's basically paying you to have people on family leave and then paying you again, not really, because it's not out of your pocket, with this Paycheck Protection Program. I'm not 100% confident in the answer, but I know with their intent of not double dipping, I would be wary of that. That would be my answer.
Excellent. On the question number 3 of the PPP application, where those above 20% list things they're a part of, are we listing everything that they're in? So if we got a bunch of special purpose entities, or I've got an S corp and I've got a partnership, I mean, you're putting everything down that you're a part of, correct?
Well, so remember, who is this? Is the business or any owner an owner of any other business or have common management with any other business? If yes, attach a listing of all affiliates. So I think you have to answer that question honestly and just fill out what those are. So yeah, if you've got other entities that you have ownership in, and I think they're 20% is who they're making this fill out. So I think that would be a good standard to use. If you've got 20% ownership in a bunch of companies, then you probably need to be telling them based on trying to factually answer this question. And including the business, right? Does the business have, subsidiaries or other things that maybe they're not the owner, but the business has wholly owned subsidiaries? You're going to need to tell them kind of what the lay of that land looks like. That's how I read question number 3. That's obviously not in the code, but that's how the SBA's saying they're going to underwrite these applications. What they're going to do with that, I don't know. Honestly, I don't know what they're going to do with that information.
Will a decrease in an oil and gas commodity be considered COVID-19 related disaster?
Decrease in oil and gas commodity be considered COVID-19. So the question would be, was it caused by COVID-19 or something other than COVID-19?
Hey, Brad.
Yeah.
I might have missed this, but we have a client in the Salt Lake office who is signing on an SBA loan. They have a business back on the East Coast as well. And there's a thing in there to check if they apply for the SBA for the business back on the East Coast and the business here. Is that considered the double dipping?
No, the different businesses, right? Like, let's say you have 4 different businesses. They could be doing the same thing or different things. If they've got payroll, as far as the Paycheck Protection Program goes, they got payroll, they're paying employees, they got to keep people employed, they all work.
Okay.
Otherwise, if they've got economic injury, unrelated, that they're going to make a case for something else, they could all apply separately for the EIDL loans, as I understand it.
Okay.
So, but would this, oil commodities affected by COVID-19? I think that's a question of, for you in that industry to make with the SBA, and if it's a disaster loan, you're going to be discussing with them. If it's for this Paycheck Protection Program, I just have a hard time believing many things haven't been affected by this. That's my general feeling. I know that the oil markets had some weird stuff going on with Saudi Arabia and Russia prior to COVID-19, but I still think that most businesses have been affected in some way by COVID-19, no matter the industry. That's just Brad Allen's opinion. Keep it for what it is.
Thank you.
For what it is.
Hey, Brad, just a quick Google search on that. There's multiple people making the argument that because demand is down on oil, just because the country shut down, we're not using oil, so demand's down, which would mean the price, goes down or whatever.
So you're agreeing with my statement that
Yeah.
most every business has been affected by COVID-19.
And that you could probably directly relate it to COVID-19. I mean, there's a lot of arguments like that just popping up on a quick Google search.
No, well, I agree. I mean, that my point here is the same. Like, I think name a business that hasn't been affected by this. There's probably a few, right? That Zoom, for example, or some of it, they're not small business maybe, but some of these groups are like, wow, now all of a sudden we weren't in need, now we're in need.
Contactless payments.
Yeah, there's some that, but again, like I said at the start, 99.9% have been, especially in the small business world. Other questions, Zach?
Yes, as this money flows in, so I get my application, it's approved. Obviously, at some point, I'm going to need to prove some of this. Any recommendations in tracking that or record, maybe just some general tips there on making sure that when the time comes, I'm able to maximize my forgiveness portion, if not have the entire thing be forgivable.
Well, obviously, the easiest, there's some no-brainers. Keep the same number of employees. Use it for the things that you said you were going to use it for to get it forgiven. That's the obvious answer. But do you put it in a separate bank account and keep it there and have your payroll draft from it or something to that effect? Seems like a good idea. We don't really have any guidance that makes a difference. But I think anything that you can do to strengthen your argument that I'm really using this for the right stuff that I said, so that when the documents come in and I can prove it, I can prove that, I didn't commingle it. I don't think that would hurt. But again, I haven't read anything. They haven't really released guidance saying, this gives you a better chance. But separate bank account is one that I could think of. But more than anything, if your payroll documents come in low, it doesn't even matter if you use a separate bank account. You're going to not have it forgiven anyways. So follow what you said you were going to use it for, first of all. And then from there, maybe you can put cherries on top of it, if you will, by isolating things and keeping really good records and, documenting stuff. That would be some thoughts that I have just off the top of my head.
I'm not seeing any more questions in chat. I don't think I've missed any. I think we've covered what's come through to me.
We'll give you one last second if anyone else has any other questions, but we appreciate you joining here. I know that this just popped up last minute, but a lot of you are having questions today. And in order to properly have a 50-minute discussion, hear other business owners' questions, felt like this was a good forum. We'll send out links to all these things we've included here today. We'll continue to communicate timely as we learn things, but I think it's time to go to work, time to get your payroll in order, time to get data, time to get ready and get your application so you're ready for it to go and be processed on the 3rd of April. There's a rush to money here across the country. All small businesses are hurting, and help talk to us if you have additional questions about where your information might be or things like that. But we're here to help you. We've got your back. We'll do everything we can as the CPA firm that you work with to be proactive. Our partner group is talking about this regularly. Members of our team we're training. So thank you for being on here. Is there any last questions, Zach?
Nothing else has come through.
Okay, well, they're all asleep. I won't say who's asleep. I'll protect the innocent. But thank you again. Thanks for choosing Davies Allen. We're here for you guys. We're the advocates of small business. Thanks for what you're doing to keep people employed, and let us know how we can help. But we will adjourn this little web chat. Hope you guys have a great day. Stay safe and take care of yourselves. We'll talk to you soon.